We used 1, 2, 3, 4 to actually take this winning trade. As you can see up here, I've put a little screenshot showing you where price was at external. So we did CP. Take you to my journal to show you how we ran it, you know what I'm saying? Go ahead and spark your spark if you're going to. Get you a little bit of water, a little hydration, you know, a little sip if you need it. And let me talk to you. So today is Sunday the 4th, January 4th, 2026. And with that being said, right here, what we're looking at is my official last trade of 2025. So I mentioned it's Sunday the 4th because this is the first official trading week of 2026. So I'm going to show you I call it market perspective, the way I see the market. How do I look at these lines and be able to know when to get in a buy or in a sell to make money? Not just one time, but consistently doing the same exact thing. The skill doesn't change. So we're going to do two things. First, I'm going to mark up a pair from top to bottom, showing you the entire process. Then I'm going to break down this win, this 3R win, and show you how the exact thing that we're doing every single week this new year is how we place ourselves in winning trades time and time again for consistency. So what we're going to do is mark up Euro USD. So me personally, I always start from the 4-hour. And the reason is because I can see everything I need to. I don't need to see all this way back here. I don't need to see all that. From the 4-hour, I'm just looking for, let me move this. So on the 4-hour, I'm literally just looking for either the lowest low, like this one, or the highest high. So this is the lowest low. If I was looking for the highest high, that would be right here. But this is literally me marking this chart, getting ready for this trading week and to take a trade to make money on this chart right here. So I find this low, I see this high. And this is why experienced traders, profitable traders will always tell you market structure is king. The market is telling me what's going on. I'm not coming with any guesses or trying to just like randomly buy somewhere. It doesn't work like that. So right here at this high point, I can see a break of structure. And these are weird. Everybody does them a little bit different. The way I do it is I just need to see a candle body close through that point. So we've got a couple candles through there, and then we create a low from there. So that is our next high and low. And following this process of marking highs and lows right here on the higher time frame, we're going to be able to determine what is the external price doing, what is the trend. And then when we go to the lower time frames, we'll see internal structure. And when those two align, that's when we want to take a trade. So right here, we can see another break of structure to the upside. And I use wicks. I use wicks because that is the highest point that the market actually went to. No, it didn't close there. It didn't. But it's the highest point it went to. So if price can't break past that point, it shows me something. So from that high, we get another low. Then we get another high. And here's where structure starts telling the story for us a lot. Right here, we can see price was going down. It made a low. It made a high. It made a new low. So right here, we have a break of structure. Right here, we have a failed continuation. So up here, it's actually a bullish change of character. So what we're seeing is the market going from a downtrend now into this uptrend. And we know that because this low right here didn't break this low, continuing the downtrend. but it actually broke to the upside, starting this uptrend. But we can see this high wasn't broke either, but this low was. So what that is actually, for one, we can label this, we can see it clearly. This is a failed continuation point, and this right here is a bearish change of character. This is price saying, I'm done going up and I'm showing you I'm going down. So this is where the ideology video that I attach with this one comes into play. This is where 1, 2, 3, 4 happens. So we get our 1, we're anticipating our 2, our 3 will be here, and we'll honestly just hope there's a trend line. There's not a trend line every single time, and we'll, through actual live trades that I post, you'll see how we go about that. 8 times out of 10, there's actually a trend line though. So we see now, I want you to know, I'm actually forming an idea for what to do this week to execute something. So the market showed me it was going down. It showed me it was going up. Now it's showing me I'm about ready to go down again. Okay. We have our 1, which is the bearish change of character itself. We are anticipating, meaning we kind of know what we're waiting for. We're waiting for a new low to be made, actually starting the bullish retracement up before the market can prove to us that it's ready to go back down by having mitigation plus another internal change of character. And I'm going to show you this on the winning trade, the last winning trade of last year. We're going to break that one down. And the point of you watching this is so you know a realistic approach to actually look at the market, have nobody tell you anything, and then be able to place yourself in winning trades. Not one time, not 2 times, but consistently, week after week, month after month, year over year. So that would be our 3, and then the trend line break is our 4. So the main thing I want you to take from this video is, what is 1, 2, 3, 4? What is 1, 2, 3, 4? And that is your market perspective, my market perspective, in order to know what the market's doing. Now, like I said, that in our edge to enter a trade is a little bit different, but you're going to be mind blown when I show you how it's almost the exact same thing. So let's break down what is 1, 2, 3, 4 real quick for you so you can write this down, you know? So 1 is break of structure or change of character. 2 is the retracement. 3 is mitigation plus a change of character. So that means price comes back into a resistance zone and we know sellers are there. So at that red box, price will actually have the change of character. And it's like, oh, I kind of already expected that. So that's, you see what I'm saying? And then 4 is going to be the trend line break, which is a big one of our entry signals. And this is congruent with how the market actually moves in highs and lows. Yeah. You have, and this is for trend continuations and trend reversals. So we're looking at a trend reversal right here, but a continuation looks like this. So you get the break, you get the new point, you get this, you get that. So where's the 1, 2, 3, 4 in just pure market structure? 1, your break of structure. 2, your retracement. 3 will be an internal change of character, and that will be when price does this right here and actually shifts structure with highs and lows. And then 4 will be the trend line break, giving you an entry signal into that trade looking like this. And you'll see basically every single trade I take will look exactly like this. See what I'm saying? But I'll leave that there, and I won't delete that, but I just want to emphasize what we're looking for on Euro USD to actually take a trade and make money this upcoming week into the new year of 2025, even if it doesn't happen this week, is sales just like this. The same thing that I just drew up is what we're looking for to actually happen to the downside. So this is where we're at for this Sunday. And I hope you understand now a way to look at the market and place yourself in winning positions. Not one time, but all year this year. You see what I'm saying? I'm trying so hard to move this thing. Okay, there we go. Boom. So now I'm going to show you how we used 1, 2, 3, 4 to actually take this winning trade. As you can see up here, I've put a little screenshot showing you we're up 2,000 on 2 accounts, so around 4K. That was right here when price was at external, so we did make a little bit more when it hit TP. With that being said, I'm going to take you to my journal to show you how I kind of talked to myself and what it looked like before everything that we see now. Because using structure, you kind of get to predict the future. So on the higher time frame, this is what I was looking at. So I seen a low, I seen a high, I see a low that has no candle closed below it besides this one, which is a doji, which is a reversal candle. Just a little hint on the importance of comprehending what different candlesticks do. So after I seen that, I see the bullish change of character creating R1. I see this retracement down creating R2. So that's what I have drew up with this little blue line right here. I was waiting for the 3, and we can see this clean red trend line. That is our 4. So this is the setup that I was looking at. This is before I took the trade. This is getting ready for it, right? So once I seen that on the lower time frame, we were just looking at the 1 hour. Now we're looking at the 15. Down here, I seen that there was the low of Asian session, which is liquidity. Asian session gets used as liquidity, which is AKA fuel for the market to make a push. And you want to write this down. When liquidity gets swept, the market has fuel to push, right? So if it did break out of this trend line, it would have been a complete 1, 2, 3, 4, but I would not have took the trade because there was resting liquidity right below it. And the market likes to sweep liquidity before it goes, right? Now that we know that, I'm seeing the setup and I'm actually present. Down here you can see it's 2:13 a.m. My first trading session is 1:50 a.m. to 2:10 a.m. So my entry didn't happen, and this is me taking a picture of, okay, next session, this is what I want to see happen, or I'm not taking a trade on this setup. So let's fast forward a little bit and see what we can see. This is price actually. Oh, okay. Move, please. Whatever. This is us actually seeing that price swept those Asian lows, making our entry valid. I think we need to wait for the internet to reconnect. Annoying as fuck. Good thing for y'all though, I'll just cut this part out, you know what I'm saying? Wi-Fi tripping, bro. Technical difficulties. Now, let's actually see what price did and show you the 1, 2, 3, 4. But this is just showing you like why I took the trade. So once we see Asian session was swept, as in it just poked below it, literally just this one time, it poked below it. Then we had the clean trendline break. Then we had a very small break and retest. At that point, when I seen that bullish candle pushing back up, I felt safe to take the trade. Why? This is what I call liquidity grabs. And this is how I see the market has taken liquidity and it's ready to actually go. So once I seen a single candle close above this internal change of character point, I felt safe to take the trade, as well as the trendline break. But let's actually look at the 1, 2, 3, 4. How do we see this? So with this pair, price was moving sideways a lot, and that's tricky, right? So over here we see we have a high, a low, a high. Candles break here. We get a low, a high. Looking for the candle break. Close here. Then we get a bunch of sideways action. Nothing broke either one of these points, and we're just kind of bouncing around. So with that being said, I know there's a lot of liquidity down here. There's buyers taking these buys, and their stop losses are right under this support zone, right? So that's just something that I seen as I was marking the chart up. So once I actually looked at structure, I seen the same way I just showed you following the highs and lows. I followed the highs and lows. I found this low, this high to be the most recent when I was looking. And you can see right here, this is Monday. So on Monday, I seen a clean low, a clean high. Then we get the liquidity grab. So with that liquidity grab, it gave fuel to push the market up, changing character. So once I seen that, I literally just started waiting for the 1, 2, 3, 4. So we got the high. Once we got the high, I actually took this Fibonacci tool that I told you about and I measured it. So I went from, this is how I would draw it up. Since this is a new low and this is the new high, I'm going to start from the low and I'm going to say, okay, I want to see out of 100%, how much is this move coming back? How much is it retracing before it goes back in that direction? So we see here, we have a 50% retracement, which is my minimum to even take a trade. So that checked the list. We have a 50% retracement. We have this level right here that was obviously used as support and then turned into resistance. We can see all this respect on it over here. Little sloppy, but this is the reality of trading. It's not going to be always super cute. It's your job. And the skill test is, can you find it in live time and then also execute it in the right time frame to where you don't lose and actually catch the move. So I seen that. So when price came back to the 50%, I noticed it's also a trend line break plus a break and retest. And remember how I told you the market view and our edge is just a little bit different, but it's the same thing. So you see how 1, 2, 3, 4 is there. That's kind of like giving us permission to play. The edge, and I'll show you this in my trading journal, the edges that I use are, for one, like we just seen, a break and retest plus a trend line break, or a trend line break plus a break and retest, like we actually seen. I have that marked backwards. So I have a few different edges that I use to actually enter the market, but this is our perspective to be able to use the edge. So once I seen that 1 hour trend line break plus break and retest, it's also a 1, 2, 3, 4. The 1, 2, 3, 4 gives me permission to know what's going on, comprehension. The edge happening allows me to actually execute a trade. So if we go down again, once that next session started, I only trade the last 50 minutes and the last 50 minutes and the first 10 minutes of an hour. But this one actually happened at 3:30. So little rule bend there. I'll keep it real about how profitable traders, we don't break our rules at all, but we comprehend what's actually going on in the market. And your job is to use those rules and use your knowledge to place yourself in winning trades. I want to say live and die by the book, but also know when your previous education is actually showing in real time, and know that it's okay to take a risk, rather win or loss, because you have to take the risk in order to position yourself for the win, regardless if you actually do take the loss. And that's how we're able to be okay with taking losses, because looking at the risk to reward of this, if I would have lost this trade, I would have lost 1 unit of risk, which my risk was $1,000. So I would have lost 1,000, but I actually made 3,000. So if I do that on 4 trades and I lose 2 of them, I made 6R, but I only lost 2R. You see what I'm saying? But long story short, once I seen the 1, 2, 3, 4 play out, liquidity gets swept, and the liquidity grab entry signal happened where an impulse entry is safe, that's the reason why I bent my time rule just a little bit. And just using my previous knowledge, using my market perspective, I was able to actually catch this trade and profit. So that's the breakdown of it completely. And I hope you learned something once again. We're going to do this again and again and again. This is how I trade. You see what I'm saying? I ain't going to say you, but now you get to make the choice. If this is something you can mentally comprehend, I would suggest deep diving, go all in on it, because this unlocks the skill of making money trading.